Rohr here with an early global view on Tuesday, August 11th, 2015. It's currently 7 a.m. U.S. Central Time, and there's quite a bit to discuss fundamentally. We'll get to that in a moment, but first of all, the prime mover this morning is China with the devaluation of the renminbi, and that has put the cat loose among the canaries, especially hitting the equities and boosting the govies quite a bit. So what has this overnight move meant to the markets? Well, it means that the S&P is down $12 at 2088. So back to the low end of the 2090 to 88 key congestion range. It's been, pardon me, over and under at various times. But one of the key aspects here that on the way up yesterday, when it pushed so smartly above 2090 to 88 early, and we were improving from below the end of the lower runaway band on the hourly MACD to back above it, it was easy to say, well, this thing could feed on itself a bit on the upside, which it did. Left an up break right around the 2094 area, and in being back down into 2090 to 88, it is actually failing this up break. So, even though 2090 to 88 remains the classical level, we'll have to watch to see if on rallies, any attempt to get back above it, this market stalls up around 2094 today. To the degree it does, it would still be stale in spite of trying to stabilize, and the lower key areas remain 2078 to 75 that we've seen on so many occasions now, and the 2060 to 56 area that it missed on the sell-off last Friday, but has been a key area, especially if we go back to a week ago Monday when the market was down into that 2056 to 60 area. Higher resistance remains 2096 to 2100, as we saw in the stall out yesterday, and with a fresh resistance that it stalled at on the way up into the early part of last week, that's this down break at 2109. And that's pretty much it for the short-term view of the S&P 500.